Good morning, guys. Yes, I'm recording one more class on the same day. Question number 33, beta. We are done till the 32nd question. This is the last class of transfer pricing, guys. Hopefully, we just have three more questions. Question 33, 34, and 35. Just my question number 35, guys, is straightforward about if you remember better, Potter's five forces, industry analysis, guys. And then question number 34, guys, is a good case study, guys, on divisional transfer pricing. Question number 33, beta, is on international transfer pricing. Let us finish question number 33, beta, first, and then, beta, we will be moving on to the other questions. Standard Corporation Inc. is a US based multinational company engaged in manufacturing and marketing of printers and scanners. It has subsidiaries spreading across the world, which either manufactures or sells printers and scanners using the brand name of SCI. So, guys, it's a US based multinational company engaged in manufacturing and marketing of printers and scanners. Subsidiaries are across the world, which either manufacture or they sell these products. So you either have manufacturing units that are situated across the countries, or, guys, you have your sales unit, sales divisions, guys. The Indian subsidiary of the SCI buys an important component for the printers and scanners from the Chinese subsidiary of the same MNC group. The Indian subsidiary buys 1,50,000 units of component per annum from the Chinese subsidiary at 30 yuan per unit and pays a total custom duty of 29.5% of the value of the components purchased. So they've given us a procurement price, guys. Remember, we are buying from our own group company, guys. But there is a customs duty, guys, of 29.5%. This is not going to your Chinese subsidiary as such, guys. This will go to the government of India. So yes, this is a cost component. A Japanese MNC which manufactures the same component which is used in the printer and scanners of SCI has a manufacturing unit in India. Now this is outside our company and is ready to supply the same component to the Indian subsidiary of SCI at 320 rupees per unit only. So this Japanese subsidiary, beta, is willing to supply us this component at 320 rupees per unit. The SCI is examining the proposal of Japanese manufacturer and asked its Chinese subsidiary to present its view on the issue. The Chinese subsidiary has informed that it will be able to sell 1,20,000 units of the components to the local Chinese manufacturers at the same price, but it will incur inland taxes at 10% on sales value. So their effective realization beta would only be 27. The variable cost per unit of manufacturing the component is 20. Fixed cost will remain unchanged. These are your exchange rates and tax rates in multiple countries. Prepare a financial appraisal for the impact of the proposal by the Japanese manufacturer to supply components for printers and scanners to Indian subsidiary of SCI. Present your solution in Indian currency and its equivalent. So, guys, whatever calculations that you're making for the Chinese subsidiaries as well, beta, do not forget to convert that, beta, into Indian rupees. Let us not forget to convert that, beta, into Indian rupees. Identify other issues that would be considered by SCI, guys, in relation to this proposal. Note, while doing this problem, use only the information provided in the problem itself and ignore the actual taxation rules or treaties that prevails in the above mentioned countries. So they're asking us not to consider the double taxation avoidance agreements as such, guys. Even if you have knowledge of international tax, they're telling us better that you should keep the knowledge to yourself. You use only the information that is specified in the question and nothing else. Whatever you do will solely be on the basis of information given in the question, guys, and not based on your personal knowledge of any other aspect. Understood, sir? Now, guys, is the time wherein you read the question, you interpret the question, guys, and then I will finally solve it. Karo beta sab log. This is the time, beta, wherein you read the question. All of you guys, please do it. Yes, beta, I hope you're all doing this. I hope you're all reading the question. Please go through it properly, guys. Yes, guys, did you all go through the information? Yes, sir, we did. In case beta you need more time and such, guys, you can always go through the information. Okay, just like the previous question, guys, even here we're trying to evaluate the just like the engines wala question. Do you remember that question, guys, wherein the Indian subsidiary can basically sell the engines in the local market here, guys, or the Italian subsidiary, guys, can also procure it from their local market. So just like this, beta, we have two options here. Either the Indian subsidiaries beta buys 1,50,000 units beta from the Chinese subsidiary, or guys, Indian subsidiary buys it from an external supplier in India, guys, and the Chinese subsidiary sells only 1,20,000 units in the local market. So we will have to see the financial impact, guys. We will have to see the financial impact. Question number page भी पलटा है सो नहीं है. Question number 33, guys. Please understand beta as to what is the existing alternative. What is the existing alternative, guys? ठीक है. Existing alternative beta, or the existing alternative क्या beta? Existing production. So the Indian subsidiary as such, guys, or you will say procurement. What is wrong with me, guys? I'm just using some random existing procurement beta. The Indian subsidiary, guys, is procuring 1,50,000 units from the Chinese subsidiary, guys, at 30 yuan, as such, guys. CNY. I hope you all know better. Renminbi or yuan beta, they're the same currency. China ka currency, guys. So RMB or CNY, they're the same currency, guys. So guys, 30 yen पे as such, guys. Alternate procurement plan क्या? Alternate procurement plan. Indian subsidiary beta, Indian subsidiary will procure 1,50,000 units. Will procure 1,50,000 units locally from another company as such, guys, from an external supplier, and the Chinese subsidiary, guys, as such beta will sell 1,20,000 units locally in China at the same price of 30 beta, but then they will have to incur an inland tax of 10. So what we will have to do beta is compare the procurement cost net of tax savings, guys, for the Indian subsidiary as such beta with the procurement cost, with also the profits beta that the other subsidiary is making, and then come to a conclusion. ठीक है, ये लिखो बेटा. First, this is what we are doing beta. What is the existing procurement plan and what is the alternative plan that we have? What is the existing plan and what is the alternative plan, guys? All of you do this beta first. Yes guys, I hope you're all clear about this. I hope you're all clear about this. Now guys, let us see better as to what is the total cost. First better, under the existing plan as such guys, we will see as to what is the total procurement cost. Under the existing plan beta, I will write total procurement cost beta net of taxes for Indian subsidiary. Net of taxes. Any expenditure as such beta that they incur, remember guys, remember, it will result for Indian subsidiary guys. Any expenditure that they incur as such guys, do not forget as such beta, it would result in tax savings. Obviously beta, that expenditure gets deducted from your revenue as such guys, and then you end up saving taxes. Correct sir? So guys, our import price guys, or procurement cost per unit is 30 yuan. Exchange rate beta is 9.8 rupees per yuan. Abhi to beta it is around 11.2. So the procurement cost per unit guys, procurement cost per unit is 30 yuan as such beta into 9.8. 30 yuan beta into 9.8 guys, 294 rupees. Add import duty guys, do not forget beta, import duty is a cost, 29.5%. 29.5% of the value of the components purchased. So 294 into 29.5% beta is 86.73. The net cost per unit guys, import duty beta here will be non-refundable, so the net cost per unit guys would be 380.73 guys, 380.73. The total cost beta for 1,50,000 units, the total cost for 1,50,000 units beta is 5 crores 71 lakhs. 5 crores 71 lakhs 9,000. This is in rupees beta, let us not forget. 500. I would write beta less tax at the rate of India mein tax kitna hai beta, 34%. 34% guys. 1 crore 94 lakhs 17,230. Net of taxes beta, net of tax procurement cost for the Indian. समझ में आ रहा है ना बेटा? हाँ सर. Like this beta, we are supposed to compute the amount of profit guys that the Chinese subsidiary is making. We will compute that in yuan as such beta, and then convert that into rupees. I hope you're all clear about this guys. ये copy कर लो बेटा सब लोग, अगर नहीं हुआ है तो. After this beta, we will be computing profitability guys of the Chinese subsidiary. Of the Chinese subsidiary guys. Are you all performing this calculation guys? चेक करो बेटा सब लोग, हुआ है नहीं हुआ है? Yes, sir. We are done with this calculation. Procurement cost is clear. Shall we proceed to profitability? Yes. Just in case someone is not done with this procurement cost, beta, please pause it here. And if you want to compute profitability of the Chinese subsidiary on your own, beta, please pause it and finish it. Okay, sir. Now we will compute profits, guys, of the Chinese subsidiary. Ignoring fixed cost and everything. जो भी दिया हुआ है बेटा उसके limited information पे. We have variable cost. We know anyways fixed cost will not change, so it's irrelevant for decision making, guys. The revenue beta for them, guys, would be 1,50,000 units into 30 CNY. So that beta, remember we are computing it in CNY, guys, Chinese yuan. So that would be 45 lakhs. Variable cost as such beta for the Chinese subsidiary. The amount of variable cost beta for the Chinese subsidiary is 1,50,000 units into 20 CNY. And that beta would be 30 lakhs. You can also do it on an incremental basis, guys. You can always do it on an incremental basis, beta. So this beta would be 15 lakh yuan. This is basically, guys, the profit of Chinese subsidiary. They will pay taxes beta there. They will pay taxes, guys. So you'll write less taxes at the rate of 25%. 25%, guys, of 15 lakhs would be 3,75,000. So this as such beta is profit after tax in yuan. Profit after tax beta. And that, guys, is 11,25,000. I will obviously want to convert this into rupees as such, guys. So that would be 11,25,000 into 6.9. वो तो yuan to dollar है. We want rupees. 9.8 rupees per yuan. So this as such beta would be 11,25,000 into 9 point. यहाँ पे क्या करा मैं? 9.8 only, no? 9.8, guys. 1 crore 10 lakhs 25,000. Due to our procurement as such, guys, our own subsidiary is making a profit of 1 crore 10 lakhs 25,000. I repeat beta, due to our procurement, our own subsidiary is making a profit of 1 crore 10 lakhs 25,000. Are we clear about this? Yes, sir. ये हो गया profit of Chinese. Copy this, guys, and then we'll present the alternative plan. We'll present the alternative option as such, guys. सब लोग ये copy करो बेटा. Yes, guys, I hope you're all done with this. Now beta is the revised alternative plan, guys. The alternative plan. Under the alternative plan, guys, let us not forget beta what will be the procurement cost for Indian subsidiary. Procurement cost beta for Indian subsidiary. It is directly with a procurement cost as such, guys, would directly be, we will be, guys, getting 1,50,000 units at a price of 320 rupees. Someone is willing to supply us that, but at a price of 320 rupees, right, boss? Right, sir. So that is 1,50,000. Now you'll be like, sir, won't there be GST? Hoga beta GST. Who says GST will not be there? But don't you think beta GST will be coming as credit? We do not have to worry. Import duty came into picture beta here because import duty, guys, you will not get a credit of it. But here pe beta, even if there is GST on purchases, you will get credit of it. So you do not have to take that as a part of your cost. So procurement cost beta, less tax savings. Tax savings, guys, at the rate of 34%. A very simple calculation beta here. So into 34%, guys, correct? 34, yes, sir. So that is 1 crore 63 lakhs 20,000. My net procurement cost as such beta is 3 crore 16 lakhs 80,000. Undoubtedly beta, the Indian subsidiary is going to save a lot. The net procurement cost as such, guys, earlier it was 3 crore 76 lakhs 92,270. Here beta it is 3 crore 16 lakhs 80,000. But then if you talk about the profits of Chinese subsidiary beta, profits of Chinese subsidiary, ek to beta, though they are selling at their volume as such beta will now be only 1,20,000 units. 1,20,000 units. Their selling price net of sales tax. Sales tax, they are not going to pocket it. Even if they are collecting 30. अब ये मत बोलना credit. Credit comes only on input purchases. लाफे मारूंगा, ठीक है? So guys, their selling price as such beta would be 30 minus 10% beta CNY 27. Their variable cost per unit as such, guys, is Chinese yuan 20 beta. So their contribution per unit as such, guys, is contribution per unit is 7. Total contribution beta I can say is, total contribution beta would be 7 CNY, guys, multiplied by 1,20,000 units, and that beta is only 1,20,000, guys. 8,40,000 yuan beta. After we do this, guys, remember in net of taxes beta, less taxes at the rate of 25%, guys, a low tax country, 2,10,000. So net of taxes beta, this is 6,30,000. Contribution net of taxes is 6,30,000. Are we clear about this? So if you want in rupees as such, guys, you will have to multiply 6,30,000 Chinese yuan beta with 9.8 rupees. And that beta would be 67,74,000. Now we will be able to arrive at the exact financial impact as such, guys. Exact financial impact. Existing alternate. What is the procurement cost beta for Indian subsidiary? Procurement cost beta for Indian subsidiary. Indian subsidiary, guys, earlier beta was effectively paying 3 crores 76 lakhs 92,270. 376 92 270. But now beta it is effectively paying only 3 crores 16 lakhs 80,000. 3 crores 16 lakhs 80,000. So there is a saving, guys, here. There is a saving of 37692,270 minus 31680,000. So this is 60 lakhs 12,270 saving, guys. Whereas the profits of Chinese subsidiary, guys, profits of Chinese subsidiary, earlier beta they were making a profit of 1 crore 10 lakhs 25,000. 1 crore 10 lakhs 25,000. But now their profits have come down to 61 lakhs 74,000. Reduction in profits कितना है बेटा? Reduction in profits. ये पूरे Indian currency में बेटा अभी we have converted everything into rupee equivalent. We have converted everything beta into rupee equivalent, guys. Please do not forget. This is 48 lakhs 51,000. The net financial impact beta. Net financial impact. Whatever we just did, guys, उसका net financial impact क्या है बेटा? To the entire group as such, guys. Net saving. Net saving. So should you go ahead with the plan? Yes, sir, you should go ahead with the alternate plan. I hope you're all clear about this, guys. अब ये check कर लो बेटा. I hope you're all done with procurement cost at least, guys, for the Indian subsidiary under the alternative plan. I'm assuming, guys, you're all done with the procurement plan beta. Yes, guys. Yes, guys. तो बेटा प्रॉफिट्स ऑफ चाइनीज सब्सिडरी कॉपी करो. आर यू ऑल डूइंग दिस? क्या सर आप एक छोटे क्वेश्चन के लिए भी इतना टाइम ले लिए? Yes, beta. Here, guys, net financial impact. Quickly copy this. So, your conclusion, beta, is that yes, we have to accept the financial other alternative. We will have to accept the other alternative. It is better that the Indian subsidiary procures it locally. I hope you're all done with this, guys. I gave you a lot of time. Now look at the second bit, guys. Identify other issues that would be considered by SCI, guys, in relation to this proposal. Note while doing this problem, use only the information that is provided. Ek second better. The question that came in. Ek second, guys. Yeah, beta. The question that came, guys, in July 2021 attempt as such, guys, is this. Matlab, similar question, guys, 3 divisions. Wohi beta, 200% of full cost market pricing and compute operating income under all of them. Such a simple question, guys. So here, beta, what are the other issues, beta, that you will consider by SCI, guys, in relation to this proposal? First thing, guys, remember, what is the main question better here is, will the Japanese manufacturer better be able to continuously supply, guys, units in the local market here in India? Second one, guys, is, will the Chinese company be able to continuously, guys, procure those contracts for 1,20,000 units or not? Will it be able to continuously sell 1,20,000 units over a longer period or not? That's another important question, guys. Japanese company as such better should be able to supply continuously, plus better the Chinese company as such, guys, should be able to guys guys, sell in the local market. The next question beta is that, what if there's a changes in fiscal policy of India, changes in fiscal policy of China? What if the changes in fiscal policy of India, guys, makes it more difficult better for the Japanese manufacturer, guys, to manufacture in India, in turn affecting his ability to supply here? What if the fiscal policies of China become more liberal as such, guys? We have to write better something against this. What if the fiscal policies of China become more liberal as such, guys? वहाँ पे the cost of production comes down as such, guys, and it is more advantageous to procure from them. And then, guys, finally, इसके अलावा बेटा, you can always talk about, ठीक है, there are more profits accruing to the Indian subsidiary, but are there any restrictions, guys, on repatriation? Are there any restrictions, guys, on repatriation? There can always be restrictions on repatriation. Yes or no, guys? Yes, sir. So all of these points are supposed to be kept in mind, guys. All of these points are supposed to be kept in mind. Understood, sir. वो points लिख लो बेटा. Other aspects to be considered. Other aspects to be considered. थोड़े points लिख लेते बेटा. Other aspects to be considered. First point beta here is the ability, guys, of Japanese company to continue to supply over longer period. The ability of Chinese subsidiary to sell in the local market. What if they're unable to sell, guys? Changes in fiscal policy, changes better in the fiscal policy of India. Increasing the cost of Japanese manufacturer. Changes in fiscal policy of China. Making it cheaper for the Chinese subsidiary. What if there are certain subsidies given, guys? And then beta, restrictions on repatriation. Restrictions on repatriation of profits. Are we clear about this? Yes. I'm zooming in as such, guys. Check karo. I'm zooming in. Hope you're all done with this. Chalo guys, let us now read the next question. A little lengthier question guys, but a nice question guys. It's a case study. याद रखना बेटा, anything that is forming part of ICI study material guys can ultimately come in the examination. Let us not forget that. Let us not forget the fact beta that anything that is literally mentioned as such guys in the study material can come in the examination. That is the reason guys we are doing everything, no matter how easier it looks, no matter how difficult it is. There's nothing difficult guys if you understand it, but it doesn't really matter as such guys what is the difficulty level or the easiness as such, but that we are supposed to do everything that forms part of ICI study material, mock test paper, revision test papers and the past examination question papers at any cost, guys. That is why even the content guys of the theory is exactly the same beta that is given in ICI study material. So even if you're referring to it or this beta, it doesn't really make a difference. This is like everything covered at one place as such beta. Rest Easy Company is a rapidly grown startup in the technology sector. It develops customized ERP packages for clients across various business sectors. The business comprises primarily of two departments, consultant and customer support. Consultant department has highly qualified professionals from management, accounting and technology background who approach clients as a team and work out solutions that meet their needs. So guys, we have two departments बेटा, consultant division and a consumer support. एक बार requirement पढ़ लेते बेटा, question बड़ा है ना, 2 पेज का है बेटा. Requirement guys, identify the threats to goal congruence due to internal transfer pricing. We all know guys that when does transfer pricing create a threat to goal congruence beta is basically where the transfer price as such guys is resulting in a change in output of the company guys, that in turn has an effect on the overall profits that could have been realized by the company. During the meeting, an alternate transfer pricing methodology based on two-part transfer pricing. Two-part beta is variable cost per unit into number of units plus a lump sum consideration was formulated. Costs would be segregated into fixed and variable categories. A transfer price for each category would be arrived based on budgeted cost and budgeted usage. The standard rate for fixed cost will be applied to the budgeted training sessions. So guys, the standard rate for fixed cost will be applied to the budgeted training sessions and charged to the user departments. The standard rate for variable cost will be applied to the actual training sessions and charged to the user departments. Fixed cost beta would be defined as those that are not directly impacted by the number of training sessions. Calculate the transfer price to be charged under this method. Loud and clear. Once we read the question, we can always come back to this beta. So they're telling us fixed cost will be based on budgeted number of sessions. Variable cost would be based on actual number of sessions. Variable cost will be applied to actual sessions. Fixed cost as such beta would be applied to budgeted sessions, and that is also beta at standard rate, not based on actual cost. Transfer price to be charged to each department. Evaluate how the two-part transfer pricing method beta addresses the threats to goal congruence as identified in question number 1. Dispute settlement cycle. Dispute settlement ke liye beta we have two-part, a dual rate transfer pricing system and two-part transfer pricing system. So guys, the very first thing that you have to keep in mind beta is identified what are the threats that the existing transfer pricing system has, and then beta go as per the revised one. Understood, sir? Now let us read the question, guys. Rest Easy Company, मेरे साथ पढ़ो बेटा. Rest Easy Company is a rapidly growing startup in the technology sector. And be attentive, guys. They say beta be mindful of what you are doing. You're not reading just for the heck of it. When you are reading the question as such, guys, think only about question and nothing else. Be sure beta that you are you're very, very attentive as such, guys, and you're concentrating on the question. It develops customized ERP packages for clients across various business sectors. The business comprises primarily of two departments, consultant and customer support. Consultant department has highly qualified professionals from management, accounting and technology background who approach clients as a team and work out solutions that meet their needs. Customer support personnel are in charge of IT implementation and they provide support through telephone, email or on-site. Currently, the strength of the consultant department is 200 while that of the customer support is 150. So guys, one is providing support, guys, in IT implementation. The other one beta is basically arriving at IT solutions. Yash, the founder and CEO of the company, is very passionate about this business model. To deliver high quality product solutions, he believes that his staff should be well trained. This is where beta they talk about training sessions. The staff should be well trained and up to date with developments in their professional fields. Therefore, Rest Easy provides periodic training to its staff in-house. All employees are expected to undergo 2 weeks of training annually. In-house training of staff beta, 2 weeks of training. A training department has been set up with qualified trainers in various fields who provide training sessions to both consultant and consumer service departments. The training department has 5 trainers. Training sessions are aimed at providing skills that the executives need to provide better service to their clients. This in-house focus of high quality delivery is the key factor that Yash believes would set apart Rest Easy from its competitors. In addition to delivering training sessions, trainers are also responsible for developing training material for routine, ongoing as well as specialized training sessions. So they can be routine training sessions, ongoing training sessions, specialized training sessions. They attend conferences, train the trainer sessions, and subscribe to journals to keep themselves up to date with various developments that consultants and customer support executives need to be aware of. So these trainers, beta, just say one Big Four has this trained the trainer program as such, beta. Train the trainer program hai hai beta. You will see, guys, a lot of your senior managers as such beta would be taking sessions, training sessions for you beta. They in turn have these training sessions wherein the trainers are trained as such, guys. So that is train the trainer. Train the trainer as such, guys. And plus, you know beta, once you become this thing a senior manager beta, तुम्हारे को training के लिए कहीं लेके जाते हैं beta. They take you to most जैसे Amsterdam, guys. What is that? Yeah. Yes, guys, they do take them. At the beginning of each year, guys, heads of consultant and customer service departments advise the training department on the expected number of training sessions. So, guys, they tell them as to how many training sessions will they be needing, guys. In special situations where development needs to be communicated rapidly, extra sessions can also be conducted. Training department budgets are prepared on these needs. So far, beta, so far what we have understood is we have a training session, we have a training department that has 5 trainers, It is their responsibility beta to train all of them. Consulting department as such beta has 200 employees, customer support has 150 employees. Every employee is expected to undergo a training beta of 2 weeks every year. At the beginning of every year as such beta, the heads of customer support, the heads of consulting department will tell the training department as to the budgeted number of sessions that they would be needing. Budgeted number of sessions. However, they can also be last minute changes. This is what we have learned. This is what we have understood from the question so far, guys. Transfer pricing, guys, training cost allocation. So this entire question beta is not about services between the consulting department and the customer support. It is about the services that training department is rendering, guys. The in-house training department is rendering beta to this consulting department and customer support department. Cost incurred by the training department is allocated to the consultant and customer service department based on the training sessions availed by both departments. A standard quote transfer price based on budgets is provided at the beginning of the year. At the end of the year, actual cost is allocated. Standard quote is given at the beginning of the year, guys. At the end of the year, actual cost is allocated based on actual training sessions of each department. Each of the user departments use the transfer price. User departments मतलब कौन, guys? ये बेटा अपना consulting department and customer support use the transfer price to prepare their individual budgets that further gets built into their pricing models used for billing clients. One of the metric for manager appraisal is also the financial performance of their individual departments. So guys, based on the standard quotes given by the training department to the training customer support, guys, and the consulting department, they in turn, guys, incorporate those quotes into their budgets and arrive at the prices that they will be charging to their clients. And also performance evaluation is dependent on the profitability of each division. Hence managers of both consultant, guys, and customer service departments are very cost conscious. The training department cost beta budgeted and actuals are given. Salaries beta 25 lakhs and 30 lakhs. Depreciation on office equipment is 2 lakhs and 5 lakhs. Software licenses for training packages beta 80,000 and 1 lakh 5,000. Conference travel for train the trainer sessions beta 10,000 and 15,000. Telephone is 20 and 25. Training supplies 50 and 60. Trainees lunch, total expenses. They budgeted the expenditure to be 29,60,000. The actual expenditure turned out to be 38,25,000 as such, guys. Now, because of this, beta, the cost allocation would drastically change. The cost allocation as such, guys, would drastically change. Yes or no? Yes, sir. The cost allocation will change. If the cost allocation, beta, is changing, again, beta, the budgets that these two departments have prepared, guys, will undergo a change. There will be variation as such, guys, and they will not like that. Consultant, guys, and customer service departments are charged on the basis of the number of training sessions availed. Details of training session for each department are as follows. Consultant department better budgeted. Consultant department told the training department that I would be needing 100 training sessions for the year, and they actually availed 100 training sessions. Customer service better on the other hand said I will be I will be getting 100 training sessions during the year, but then they actually got 80 training sessions. Remember, guys, because of customer service availing lesser number of training sessions, the cost per training session will increase, and this in turn beta would affect the consultant department. He might have incorporated. See, guys, जब consultant department incorporate कर रहा है, he must have said 200 guys, total cost divided by 200 training sessions. This would have been the standard code given at the beginning of the year, but ultimately at the end of the year beta it will get divided by 180 sessions only. Ultimately at the end of the year it is going to get divided by 180 sessions only. So this in fact as such beta will increase the transfer price. In accordance with the above explanation, guys, अच्छा ये सब दिया हुआ है बेटा. In accordance with the above explanation, the training department quoted a rate of 14,800 per session based on the budgeted cost and budgeted training sessions. The actual cost per session turned out to be 21,250, guys. Cost overrun of 6,450, a jump of 44% from the original quote. Consequently, a meeting was called that was attended by the managers of consultant, customer service and training departments, along with the CEO Yash. The user departments were unhappy with the higher charge. Manager of the consultant department raised the following concerns. The market rate for similar trainings provided by external vendors was only 12,000 rupees per session. He has accepted a higher transfer price of 14,800 per session only because the in-house training program was more customized towards REST easy's end user clients. However, if the training department is actually going to charge 21,250 per session, he would rather source the training to the outside vendor. Further, he pointed out that while his department has adhered to its commitment of 100 training sessions, the customer service department has availed 20 lesser sessions than its commitment. Reviewing the cost structure of the training department, most of the expenses are fixed in nature. Therefore, when transfer price is based on actual cost and actual training sessions, the per session cost has increased because the customer service did not undergo the entire 100 sessions. He questioned why should he bear a higher allocation of cost due to variance in actual and budgeted usage of training resources. Perfect, guys. The manager of the customer service department explained that the variance of 20 training sessions is on account of the executive handling high priority work pressure that did not allow them enough time to complete some of the training sessions. At the same time, she contended that she should not be charged for those 20 sessions for which training was not availed. Manager of training department explained that 5 lakh rupees cost overrun on salary was due to the new hire of a trainer. The trainer's experience is very valuable to the company, and hence to get her on board, the company had to offer a higher pay scale. Depreciation on office equipment was higher by 3 lakhs due to higher replacement cost of aging equipment. A specialized software license resulted in an excess spend of 25,000. Manager argued that the rest of the expenses were normal increases which were not controllable. Yash, the CEO, was understandably not happy with the cost overrun. Higher internal transfer to the end user departments would affect employee morale. However, even though a cheaper option was available from the outside vendor, he could still foresee the value of investing in in-house training programs. Intangible benefits from these customized sessions would definitely help the company's growth. To conclude, he was not willing to shut down the training department. At the same time, he had to resolve the dispute resulting from internal transfer pricing in an amicable way. Like profits, teamwork is critical to success. And here I rest my case. Yes, guys, you'll be like, sir, कुछ ज़्यादा ही नहीं पढ़ लिया. I will give you summary of the entire question, guys. Do not worry about it. ठीक है? But I would suggest, बेटा, take 5 minutes. आराम से लो बेटा 5 minutes. Read the entire question again. Exactly 5 minutes, बेटा. I'm at the end of 53rd minute. 57th या 58th minute में, guys, I will resume it. ठीक है? Read the entire question, guys. Read the entire question properly, बेटा. Yes, beta, please do it. Yes, beta, I hope you're all reading the question. You're all good to go, guys. I hope you all read the question, guys. I'll just again better give you a brief summary of the entire question. A brief summary, guys, of the entire question, better. Very nice question, guys. अच्छा है ऐसे क्वेश्चंस एग्जाम में दे तो वी शुड नॉट बी सी गाइस यू नो मोस्ट ऑफ द टाइम्स गाइस ये केस स्टडी का सिर्फ डर रहता कि दिस इज केस स्टडी वी हैव डन सो मेनी केस स्टडीज गाइस सो मेनी केस स्टडीज टिल नाउ टेल मी गाइस व्हाट वर द कॉम्प्लिकेशंस once you read the requirement, once you recollect the concept related to that as such, guys, it is so easy answering a case study. Yes, I accept the fact that sometimes it may not be scoring, but it is easy to answer. It is not at all difficult. ठीक है सर भाषण बंद करो. So guys, there are, what are the divisions here as such, guys? What are the divisions? We have consulting department, guys, which has 200 employees. उनका काम क्या है बाद में देखेंगे बेटा. There is a consulting department, guys, with 200 employees. There is customer service department with 150 employees. And then beta there is this trainer department, training division, guys. 5 trainers, in-house training to consulting and customer service. Consulting department, guys, and customer service. सिर्फ summary of the question है बेटा ये. Customer service. Okay, okay sir. इसके बाद में बेटा you have to understand this. Consulting department and customer department and customer service department will inform the training department, about the expected number of training sessions required. About the expected number of training sessions required. Expected number of training sessions required. ट्रेनिंग सेशंस रिक्वायर्ड गाइस. ठीक है. हाँ सर. उसके अलावा बेटा ट्रेनिंग डिवीजन as such guys will submit or will quote a standard, will quote a price per session, will quote a price per session at the beginning of the year, based on budgeted cost. I'm just trying to give you a summary of the question guys. Based on budgeted cost and budgeted sessions. However, the actual cost, the actual transfer price at the end of the year, was at the end of the year is based on actual cost and actual sessions. ठीक है. So what is the problem here, sir? The budgeted quote or the budgeted rate per session was, budgeted rate beta per session was, we can also compute guys, 29,60,000 divided by 200 sessions, 14,800 per session. The actual cost per session is 38,25,000 divided by 180. 38,25,000 divided by 3825 divided by 180, 21,250. The amount of cost overrun per session is 6,450. Reasons as such guys. एक तो बेटा there are increase in expenses of training division. There have been increase in expenses of training division. Okay, yes sir. Second thing guys is that customer support availed lesser training sessions, resulting in increase in cost per session, and then beta your consulting division can avail, consulting division beta can avail trainings from third party at 12,000 rupees only, at 12,000. Yes, but internal training beta is of a higher quality, customizable जो भी है बेटा is of a higher quality. ठीक है. Impact क्या है बेटा इसका is divisional performance is based on profits. And profits are getting impacted beta. Profits are impacted due to cost overrun of training department. This is the main reason why they're all shouting now, why they're all fighting now. ये है बेटा मेरे क्वेश्चन की अंडरस्टैंडिंग. समरी ऑफ क्वेश्चन बेटा, समरी ऑफ क्वेश्चन, नथिंग एल्स. क्या सर आप भी इतना बड़ा समरी लिखा दिए? ऑप्शन क्या है बेटा मेरे पास? दिस इज अ समरी ऑफ क्वेश्चन गाइस व्हिच ऑल ऑफ यू विल गो थ्रू, ऑल ऑफ यू बेटा विल राइट ऑफ कोर्स इन योर बुक. सब लोग लिखो बेटा ये. I hope you're all done with this. बेटा ये check करो अभी. I hope you're all done with this, guys. Now let us read the question, guys. I've given the entire summary of the question as such beta here. Just in case you're not done with any part beta, you can always copy. अब first bit क्या पूछ रहा है बेटा यहाँ पे? Now we can all understand the question properly, guys. First bit says required beta identify the threats to goal congruence due to internal transfer pricing. Threats to goal congruence beta due to internal transfer pricing, guys. What would be the threats, guys, here? कुछ नहीं है सर, क्या threats वेट्स? So guys, the problems beta because of this internal transfer pricing as such, guys, is that the performance evaluation of the departments is being based on the cost overrun of some other department. The performance evaluation, guys, of consulting and this department is being based on the cost overrun of other departments. That is the first problem. Second problem as such beta is that outside training sessions are available at 12,000 rupees as such, guys, but inside training, our in-house quality training sessions are priced beta at such a high amount, as such, guys. So that will obviously lead to conflicts between departments, guys. Conflicts between departments. Next beta और क्या दिया हुआ है? हाँ, most of the costs are fixed as such, guys. Most of the costs are fixed. So merely because, guys, one training department as such, guys, is not availing the training as such beta, the other training department is being billed a higher amount, higher amount, guys. लिख लो, guys. Now requirement as such, guys. Answer I'm just writing these summary points as such, guys, nothing else. I've already described all the problems that are threats to goal congruence है बेटा यहाँ पे. Threats to goal congruence, where the objective of the organization is more important. Threats to goal congruence. यहाँ पे बेटा quality is more given more importance बेटा than the amount of financial aspect. Let us not forget that as such, guys. Let us not forget that. ठीक है? Yes, sir. As entire cost of training department guys is allocated to other departments training department as such beta might not control cost. Training department may not put in effort to control cost. उसका क्या जा रहा है बेटा? He will simply say कि ठीक है, there's a cost overrun to control cost. Yes or no? The performance evaluation, guys, performance evaluation guys of consulting and customer service department, the performance evaluation guys of consulting and customer service department is affected due to the cost overrun of training department. So it is based on uncontrollable factors. Yes or no? Yes, sir. And then beta, the other part beta is majority of the expenses are fixed. Majority of the cost as such beta are fixed. Because majority of the cost are fixed as such, guys. Majority of the costs are fixed. The lesser training sessions availed by one department, availed by customer service department is resulting in a higher cost allocation to consulting department. Again beta will lead to conflicts. Yes or no? Outside training beta, outside training is much cheaper. Outside training as such beta, training cost is much cheaper than the in-house training. In-house training. समझ में आ रहा है? हाँ सर. ये पूरे पॉइंट्स लिख लो बेटा, जूम इन करके पॉज करके लिख सकते हो guys, and we'll read the next question. You can pause and copy guys, or you must be writing it with me only guys. You can pause and copy. Here guys, I hope you're all done. Now guys, if you look at the second component as such beta, it says second component क्या बोलता है? Second bit, he's asking us to compute transfer price guys, calculate transfer price. So now what are we doing beta? Transfer price, fixed cost beta, fixed cost based on standard cost and budgeted sessions. Variable cost as such beta, variable cost is based on standard cost and actual sessions. Standard cost beta and actual sessions. इसका मतलब क्या है सर? इसका मतलब क्या है बेटा? मैं पढ़ाता हूँ. Look at the expenses given in the question, guys. Look at the expenses given in the question. Undoubtedly, better the salaries of the trainers as such better would be fixed in nature. Forget the actuals better, now not relevant. Undoubtedly, the salaries as such, guys, of the trainers as such better would be salaries of the trainers better would be fixed in nature. Depreciation on office equipment better is fixed in nature. Software licenses would be a fixed expenditure, would not depend on the number of training sessions that you're undertaking. Conference travel for the trainer sessions is a fixed expenditure. Telephone is a fixed expenditure. Training supplies is a variable expenditure. Trainee lunch beta is a variable expenditure. So you see, guys, a majority of the expenses are fixed in nature, guys, and the remaining expenses are variable in nature. Okay? So guys, we will now compute beta. We will now compute computation of transfer price beta. So no, computation of transfer price. Remember, guys, it should be based on budgeted cost. Always based on budgeted cost beta. That is what is standard cost. Based on budgeted cost. When they say standard rate, we have read the question, guys, already. If you want, you can read the question again once. So guys, pehle to beta fixed cost. If you see, guys, fixed cost, salaries beta as per the budget, salaries beta as per the budget is 25 lakhs. Depreciation, guys, on office equipment is a fixed cost, and that is 2 lakh rupees. Software licenses beta is again a fixed cost, and that is 80,000. Conference travel beta for all of this train the trainer sessions is fixed cost. Telephone as such beta is a fixed cost. Telephone beta is fixed cost. All put together beta is 28 lakhs 10,000. Arey Bhagwan. 28 lakhs 10,000. Your variable cost as such beta is training supplies. Training supplies as such beta would be a variable cost, budgeted 50,000. Trainee lunch. We're trying to solve the problem beta here. 1 lakh rupees. Sun lo beta, I'll give you time to copy. 1,50,000. So we have segregated fixed cost and variable cost, guys. If you talk about your transfer price beta, transfer price per session. Transfer price, guys. Fixed cost as such beta per session. Fixed cost beta per session would be 28 lakhs 10,000 divided by 200 sessions. You will divide 28 lakh 10,000 beta by 200 sessions, guys, and that is 14,050 rupees. Your variable cost per session beta, variable cost per session should be 1,50,000 beta divided by 200 sessions. This would be beta 750. 750, guys. Abhi beta total allocation. Total allocation as such, guys, to consulting, sun lo beta, important hai, consulting department and customer service. Fixed cost beta will not depend on fixed cost, not dependent on actual sessions. Wahi to baat hai beta question ki, not dependent on actual sessions. They say fixed cost will be allocated based on budgeted sessions. Irrespective of the actual sessions, guys, both of these departments are going to get an allocation of 14 lakhs 5,000. 14 lakhs 5,000, guys. And for variable cost as such beta, variable cost, this would be 750 rupees beta into actual sessions. We do not care about the actual cost as such, guys. It will be 750 rupees beta into actual sessions. So 750 into 100, guys, 75,000. And 750 into 80 beta 60,000. 60,000. इससे क्या होगा बेटा is the complaints of this department would come down beta. The total allocation to them is only 14 lakhs 80,000, and the total allocation to them beta, even if they undertake lesser sessions, guys, they cannot complain कि we cannot be billed for those 20 sessions. Yeah, we are not billing you variable cost, but you will still have to take fixed cost. 14 lakhs 65,000, guys. 14 lakhs 65,000. So total allocation beta, total allocation is 29 lakhs 45,000. Total actual cost कितना है बेटा? Total actual cost. Total actual cost as such beta is 38 lakhs 25,000. Cost not transferred. Cost not transferred as such, guys, is 38 lakhs 25,000. 8 lakh 80,000. Only 29 lakhs 45,000 beta is ultimately getting transferred to the division. समझ में आ रहा बेटा as to how are we solving the problem? Now, guys, these divisions cannot complain, guys. These divisions cannot complain. That will become the answer to the third bit, guys, as to how is it addressing the threats to goal congruence. Just say, beta, what is a complaint of the customer service department? We cannot be billed for the training sessions we did not undertake. Yes, we are not billing you. We are billing you only for 80 sessions. Fixed cost will obviously, fixed cost is not dependent on actual number of sessions. So we will have to bill fixed cost based on the budgeted amount at the beginning of the year. And then, guys, the problem beta of consulting department is also taken care of, that their cost per session is not increasing because customer service department is guys, availing lesser number of sessions. Also, guys, the cost inefficiencies of the training department are not being reflected in the transfer price. So even that conflict is settled as such, guys. That conflict is settled. Also, guys, as the number of sessions are increased, as such, guys, remember the fixed cost per session is going to come down, and the overall transfer price beta can be much lower, as such, guys. So we do not even have to worry about the overall cost incurred, guys, and about external cost being 12,000 rupees per session. Or kya beta? Yes, we have addressed all these issues. And of course, beta, this transfer pricing session will motivate this as such, beta, will put pressure on the training department as such, guys, to control their cost. This will undoubtedly put pressure, guys, on the training department, guys, to control cost. समझ में आ रहा है? हाँ sir. All of you better copy this. I'm going to give you all of those conclusions. A very nice question, guys. लिखो बेटा सब लोग फटाफट. All of you better copy this. ठीक से कॉपी करना बेटा, सोच समझ के करना. The question is very clear, guys. Just in case you have doubt, beta, read that question. They say there is a standard cost as such, beta. You're computing transfer price, beta, per session. You are computing transfer price per session, guys, based on budgeted cost and budgeted sessions. Based on budgeted cost and budgeted sessions. Allocation of fixed cost, beta. Allocation, ये point लिख ले रहा हूँ बेटा ताकि तुम्हारे को confusion नहीं रहना. Allocation of fixed cost, guys, based on budgeted sessions. Allocation of variable cost, beta, based on actual sessions. Allocation of variable cost, beta, based on actual sessions. Please go through this, guys. ये देखो बेटा सब लोग. Computation of transfer price is based on budgeted cost and budgeted sessions. I hope you're all done with this, but आगे का check करो. Here beta, yes beta, I hope you're all done with this. Let us now answer the third bit beta. ये सबको समझ में आया ना guys? Just in case you haven't understood any part of it guys, please contact, do not forget. Third part is such guys here. What will you write beta is, how is it solving problems beta? The new transfer pricing system beta, the new transfer pricing system addresses all the issues. Transfer pricing system addresses all the issues. First beta, the training department as such guys will work on reduction of cost, as variances are not transferred, That's the first one guys. Second one guys, consulting department guys, the incremental cost per session is only 750 rupees. Incremental cost per session is only 750 rupees. Fixed cost allocation will not depend on actual sessions. तुम लोग साथ में लिख सकते हो बेटा. It will not depend on actual sessions. So they are happy about it. Yes or no? Customer service department cannot complain. Customer service department beta cannot complain about cost allocation. Cost allocation guys for 100 sessions, as variable cost is allocated for only 80 sessions. उनको तो वेरिएबल कॉस्ट सिर्फ 80 सेशंस का ही दे रहे हैं ना बेटा. फिक्स कॉस्ट दे कैन नॉट डू एनीथिंग. दे गेव अस अ एस्टिमेट नो एट द बिगिनिंग ऑफ द ईयर दैट दे वांट 100 सेशंस. सो ये लो कॉस्ट 100 सेशंस का as variable cost beta is allocated for only 80 sessions. For only 80 sessions. Next beta, an increase in number of sessions. An increase in number of sessions. Increase in number of sessions will reduce the overall cost per session. Will reduce the overall cost per session. So this is how beta we are able to solve all of these issues. I hope you've all taken this seriously guys. अच्छे से करे and you did not just guys ignore the question. We will now be proceeding guys to the next question beta. Last question of this chapter, question number 35. वो भी case study type है beta with the answer but फिर भी कर लेते guys अच्छे से. ठीक है? हाँ sir. Yes guys, चेक करो बेटा ये. Are you all done with this? Yes sir. Pause करके कर लो बेटा नहीं हुआ है तो. Let us now do question number 35 guys. Question number 35. Porter's 5 forces and the divisional transfer pricing guys. Do you remember Porter's 5 forces beta? We did this guys under industry structure analysis guys, chapter number 1. There's bargaining power of buyers, there is bargaining power of suppliers, and then beta there is rivalry of or intensity of competition, there's threat of new substitutes, there is threat of new entrants guys. As far as bargaining power of customers is concerned guys, I told you it would depend on the amount of quantity beta that the customers are buying. It would depend on switching cost beta from one supplier to the other supplier. It would also depend on the importance of the product as such guys to them. What proportion of expenditure are they incurring on the product? I hope you remember all of those points guys. Likewise, when you talk about bargaining power of suppliers guys, again, are they dependent on us? Who has a higher power here? Are there multiple players? Industry as a whole guys, does it have overcapacity? All of those factors beta would be taken into consideration. So in the 5 forces model, one of the crux is that companies or divisions compete with their buyers and suppliers. So now guys, here they are competing with their suppliers and buyers guys. Let us concentrate only on buyers and suppliers guys of 5 forces model. We are not talking about all the 5 forces. So when they say guys competing with buyers or suppliers as such guys, they're only talking about whatever is the bargaining power of buyers and bargaining power of suppliers. The same model can be used to evaluate the competitive environment of the divisions of large, complex companies. It says, guys, the same model can be used to evaluate the competitiveness between divisions, guys. When you talk about interdivisional transfers, guys, do not forget one division is a buyer, the other division is a supplier as such, guys. So, यहाँ पे बेटा the same model, bargaining power of buyers and suppliers can be used. In such companies, some of the divisions may be buyers and suppliers to one another. This leads to management accountants becoming involved in negotiations leading to the agreement of suitable transfer prices between these divisions. Management accountants interfere guys so that there's an agreement of a proper transfer price. Explain how the forces applied in a relationship between buyer and supplier led Michael Porter to reach a conclusion that companies compete with their buyers and sellers. So here beta we will have to talk about bargaining power of buyers and suppliers only. Discuss the issues of negotiating and agreeing transfer prices between divisions within a large complex organization. A large complex organization guys is created. Do not forget beta, a large complex organization is created because of vertical and horizontal integration as such guys. There will be interdependencies of divisions. Just say if you are acquiring your own raw material supplier guys, then obviously beta that is an internal division supplying you raw material guys, supplying you raw material. So there will be some amount of interdivisional transfers. Make references to Michael Porter's model and your arguments in part above where appropriate. So guys, you will have to obviously compare it as such, guys, with the amounts here. The question is very simple, guys. There's nothing in the question. It's a generic question talking about guys, the bargaining power of buyers and suppliers. If you wish, beta, you can pause the video at this point, guys. Go back to those points. Go back to those points as such, guys. तुम्हारे को अगर याद है तो बेटा मैं क्या क्या लिखाया था bargaining power of buyers and suppliers में. We discussed a lot of questions there, guys. ये देखो बेटा, Porter's 5 forces, guys, industry structure analysis में देखो बेटा. I said, guys, industry structure analysis is very important to identify what is the profitability of the overall industry, identify what are the opportunities and threats, and helps in better strategy formulation. For bargaining power of buyers, guys, I said higher bargaining power beta will always result in lower prices and lower profits. If your customers as such, guys, have a higher bargaining power, it would result in lower profitability, guys. The higher bargaining power of customers beta can be due to there are very few number of buyers, guys. Buyers are concentrated. They buy a huge amount of quantity from you. A large company is procuring from a small company. If Tata Motors is procuring better from a smaller manufacturer, obviously Tata Motors will have a higher bargaining power. There is very low switching cost as such, guys. They can easily shift from one supplier to the other supplier. Standardized products easily available in the market, guys. Information about multiple sellers easily available. What can the company do better? Differentiate their products, customer loyalty programs and memberships to reduce the bargaining power of the customers. Likewise, bargaining power of suppliers better can be due to bargaining power of suppliers. If the suppliers have a higher bargaining power better, this will lead to high input cost and lower profitability. The factors better are, what if there are low number of suppliers? The supplier's product is unique as such, guys. There's a very high switching cost. You cannot shift from that supplier to other supplier, guys. Okay, sir? Yes, sir. Now, guys, you will see better as to how can we implement that better in this question. वो क्या बोल रहा है बेटा? Explain how the forces applied in the relationship between supplier and buyer led Michael Porter to reach a conclusion that companies compete with their buyers and suppliers. Undoubtedly, beta, companies compete with their buyers and suppliers for higher profitability. Who gets a larger share of profit as such, guys? If the customers are paying a higher price, you end up making more profits. If the customers pay a lower price as such, guys, you would end up making lesser profits. Likewise, if you pay a higher price to your suppliers, you would make a lesser profit. If you pay lower price to your suppliers, beta, you would make a higher profit. Yes or no? Where buyers and sellers better struggle to steal margin from each other. Buyers and sellers better are struggling to steal margin from each other. The competitive forces between buyer and supplier better will affect the price and quality. If there's a very powerful buyer as such, but if there's a very powerful buyer, he will, guys, force you to either deliver a better quality product as such, guys, at the same price, or better ask you to deliver the same product at a lower price. Just say Tata Motors has now classified their suppliers, if you remember the example that I gave you in the class, into multiple categories, guys. So there are the categories of suppliers, better they might eliminate or work on them better to improve the quality issues, So if you are a very large buyer as such, guys, obviously you can force them better to supply a better quality product at the same price, or reduce as such, guys, the price for the same quality. The relative size of the parties also determines, guys, as to who has a higher bargaining power. Guys. Switching cost for it is very important. Availability of alternate suppliers or buyers is another factor as such, guys. So they compete with their buyers and suppliers. A very, very generic question, guys. Very, very generic question. समझ में आ रहा है ये part? A very, very generic question, guys, as to how they compete with each other, guys, to get a share of their margins. We'll just write the summary in the book, guys. Question number 35 beta, we are going to write the summary beta for here. First one beta is, क्या बोला बेटा वो? Companies compete with their buyer and suppliers. Please understand, guys, if buyers pay a higher price, profits are higher. If they pay a lower price, profits are lower. Likewise, beta, if we pay suppliers a higher price, beta, our profits are going to be lower. If you pay a higher price as such, guys, our profits are going to be lower. And if we pay suppliers a lower price as such, guys, our profits are going to be higher. Our profits are going to be higher. It will all depend on, guys, our own compete. We are competing with them. So basically, beta, buyers and sellers will compete. Buyers and sellers, beta, will compete to get a higher share of profits. To get a higher share of profits. Higher share of profits, guys. What are the factors, beta? Factors, guys, that will affect all of this. What are the factors that will affect all of this, guys? First factor, beta, is the quantity, guys. Large order, beta. That's a powerful buyer. A powerful buyer as such, guys. If there's a large order as such, beta, powerful buyer will insist on better quality at the same price. Better quality at the same price. Or, guys, same quality at lower price. Same quality at lower price. Whatever it is, beta. This would in turn affect. Yes or no? The relative size of parties, guys. Relative size of parties. A larger company, guys, usually has a higher bargaining power. A larger company, beta, has a higher bargaining power. Has a higher bargaining power. I still remember, guys, one of my friends as such, guys, was negotiating with his supplier. There's a wholesaler based in Mumbai. He deals with the product in Hyderabad as such, guys. So he was selling that, nahi, I have to increase the cost better from plus 2%, cost plus 2% to cost plus 2.5%. 2% was sufficient better because here the product had a very low turnover period. The entire realization cycle better was just based on 5-6 days better. Supply se leke cash collection mein only 5-6 days. So that 2% margin better was sufficient. So for them better, they said, guys, it would be cost plus 2%. Cost plus 2%. And he was like, no, I have to increase it to cost plus 2.5%. And he was like, no, I cannot increase the selling price to the sellers, to the ultimate customer here, because the competition is already very high. And he says that you do not have to worry about the pricing, because do not forget, look at the way better. He says, do not forget that I am the only supplier of your product in the market. And in case you even think about, guys, outsourcing it, in case you think about roping in a new party as such better for another product, I have good relations with all the customers here. So if I switch to some other product, my customers will buy other product and not your product from some other person. He had that bargaining power, guys, because he had a very good relation with the ultimate customer. So that is bargaining power beta that you see in real life. पूछो बेटा अपने जो भी businesses में involved है, guys, they will all know, guys, that yes, bargaining power functions perfectly fine, and as per these principles only. As per these principles only, guys. Switching cost as such, guys. Switching cost as such beta. If the buyers have a low switching cost as such beta, they can easily shift beta from one seller to the other seller, and that in turn beta would result in lower pricing. Low switching cost gives a higher power to buyers. Low switching cost gives higher power to buyers. Higher power to buyers. And finally, as beta यहाँ पे क्या दिया? Availability of alternate suppliers. Availability of alternate suppliers. You can also write, guys, quality of the product. Quality or uniqueness of the product. If the product is unique as such, guys, if the product has a better quality as such, beta, the seller will have a higher bargaining power. The seller beta will have a higher bargaining power. He can always say beta that you are not going to get this product elsewhere in the market. I'm zooming in, guys. You can copy just in case you're not done with it. Check करो बेटा सब लोग. I hope you're all done with this, beta. I hope you're all done with this. Now guys, if you look at the second bit beta here, discuss the issues of negotiating and agreeing transfer prices between divisions within a large complex organization. Make references to Michael Porter's model and your arguments in part 1 where appropriate. ये जो आंसर है बेटा, this is the answer to second bit guys. First thing, यहाँ पे first bit दिया हुआ है, this is actually second bit. Numbering wrong है guys. So what this entire bit is all about beta is as to how there is bargaining created beta between buyers and sellers. When you talk about a very large complex organization as such guys, there will be a lot of amount of vertical and horizontal integration leading to interdependence between divisions. One division would be procuring components from the other division. There will be services rendered by one division to the other division. What is an appropriate transfer price as such guys? Everyone would want to have a higher share of profits. Their performance is evaluated based on the profitabilities beta that they are generating in the organization. So when everyone wants to get a higher share of profits as such guys in the division, what would be an ultimate transfer price? What would be an appropriate transfer price? तो यहाँ पे देखो guys, the company faces the risk of sacrificing. The whole objective guys of guys acquiring your suppliers guys, creating a complex organization beta is to save beta. You will be able to manufacture the same product that you were earlier procuring guys at a lower price. You will be able to guys manufacture a particular product beta that you were procuring guys externally at a lower cost. But whatever savings that are arising as such guys, what if beta a lot of that is just going off? Matlab your resources are being wasted as such guys only in settling the disputes between the divisions as such guys, only in deciding as to what is an appropriate. The sacrifices beta. Okay. If management needed to invest a considerable time in transfer pricing negotiation, if the management were to invest a lot of time guys in negotiating the transfer prices, then whatever savings as such beta that you were getting on account of acquiring your suppliers as such guys, those benefits as such guys are going away. So guys, the divisions will be competing with each other as such guys, just as we described as such beta. The transfer price beta will affect to a certain extent the profitability of the divisions and their own performance. जो मैं अभी बोला beta मैं, the transfer price will determine the level of bonus paid. So obviously the managers beta will have a personal interest guys in negotiations. So the parent company beta must determine whether the transfer price is in the best interest of the company or not guys. If it is, impose it. If the transfer price beta is in the best interest as such guys, it should be imposed on them. Imposed on them मतलब क्या guys, बोल रहे कर लो. This finishes off competition but may discourage managers, especially when divisional bonuses are made. In most companies some amount of negotiation is allowed, but this may not be realistic if transfer is necessary. In this case the bargaining power of the supplier division is vastly increased, thus destroy the balance of the negotiation. If the transfer is necessary as such guys, you know that the other division is dependent on us, the supplier division beta may have a higher bargaining power. The opposite is the case, but if the supplier division is not able to make external sales guys, or if there is no external market at all as such guys, in this case the bargaining power clearly lies with the buyer division, as the supplier has no choice but to make the transfer. However, if the special component or supply is not available from elsewhere, the bargaining power again may shift to the supplier guys division at its product is of differential nature. The outcome of any transfer price negotiation must be ended beta in a transfer at fair price. Fair price beta is something beta कि दोनों जहाँ पे खुश है. तो यहाँ पे है beta, if there is guys, if there's a lot of free market as such beta, then fair price can be easily determined using the free market. Otherwise it will be somewhere between marginal cost and nominal margin guys. Nominal margin. समझ में आ रहा है? So basically you do not want a lot of time, basically a lot of time invested in negotiations guys, invested in negotiations. सुन लो बेटा, I'm going to give you a summary guys. Requirement 2 beta here. The whole objective guys, सुन लो, I'm just going to give you summary of the entire answer that is given there beta, so that you can refer to it on a later date. Why do organizations guys have a complex structure? Multiple companies guys, multiple large companies beta have complex structures, There will be a lot of vertical complex structures guys, a lot of vertical and horizontal integration, beta and horizontal integration, yes or no, dependent on each other guys, leading to interdepartmental transfers, leading to interdepartmental transfers. Interdepartment transfers. Yes or no, beta? The integration, guys, integration क्यों करे बेटा? इंटीग्रेशन बेटा was to save cost, as such बेटा. Manufacture at a lower price than procure at a higher price. Manufacture at a lower price beta than procure at a higher price. That is the whole objective of integration, right? Procure at a higher price. But guys, if a lot of time is spent in negotiations, if a lot of time is spent in transfer price negotiations, then the whole objective beta, if a lot of time beta is spent in transfer price negotiations as such, guys, the impact of saving is minimized. The impact of saving beta is minimized. There's hardly any benefit as such beta there. There's hardly any benefit. Yes or no? Let us not forget, guys, that divisional performance is usually based on profits. Divisional performance is based on profits. Is based on profits as such, guys. Yes or no? So transfer price beta will affect bonus. Transfer price beta will affect bonus. तो उन लोगों को तो पर्सनल इंटरेस्ट रहेगा ही रहेगा बेटा. Now, if transfer price is in the best interest of the company, if transfer price beta is in the best interest of the company, impose it on divisions. If transfer price beta is in the best interest of company, guys, impose it on the divisions. Few divisions may not be happy about it. Impose it on divisions, guys. Divisions may not be happy about it, but then no if, no but, khatam karo. Let us not waste a lot of resources. Otherwise, guys, otherwise beta, if there are negotiations are permitted, if negotiations are permitted as such, guys, it would depend on who has a higher bargaining power. Who has a higher bargaining power beta? If there is external market, if there is external market as such, guys, supplier division beta, supplier division will have a higher bargaining power, has higher bargaining power. If there is no external market, guys, or if there is spare capacity, if there is no external market or there is spare capacity beta, there is spare capacity, the receiving division, guys, the buyer as such beta, receiving division has higher bargaining power, has higher bargaining power. समझ में आ रहा है बेटा? फेयर प्राइस एज सच, गाइस, सब लड़ ले रहे बेटा, सबको अपना अपना प्रॉफिट चाहिए. फेयर प्राइस, गाइस, कैन बी the competitive price as such, guys, prevailing free market price, competitive beta free market price. If there is no market as such, guys, if there is no market, somewhere between marginal cost, it will be between marginal cost beta and cost plus markup, and cost plus markup, somewhere between these two, guys. So ultimately, guys, the whole conclusion is that you should not be spending huge amount of resources as such, guys, huge amount of time, huge amount of cost beta in negotiations, because if you do spend a lot of time beta in negotiations, then the benefits of transfer price as such, guys, benefits of having a very large complex organizations beta will fade away. I'm zooming in. You guys can copy these important points. I hope you all understood question number 35 as well. Sir, are we winding up the session now? No, better, because we have time and I do not want to start a fresh chapter in the middle of this session, guys. अभी तक अपन एक भी chapter बेटा ऐसे बीच में शुरू नहीं किए. I might do one additional homework question, guys. I do one additional question, guys. Homework question कहते हैं, additional homework. I hope you're all done with this, guys. ठीक है बेटा, नहीं हुआ तो पॉज करके कॉपी कर लेना. Okay? Yes, sir. Now guys, we will just do one more additional question, guys. बाकी सबके answers दे दूंगा मैं. There's one question, guys, here included from the ICI study material. बाकी पूरे ICI study material के नहीं है, but they're all good questions, guys. 36, 37, 38, 39, 40, 41. All of them are non-ICI questions only, guys. Only one question, guys, from ICI material. Let us finish off that as well, guys. Mother company limited has two business units, BPO unit engaged into telemarketing and a KPO unit. KPO is knowledge process outsourcing unit focusing on business analytics. Recently the CEO was reviewing the half yearly financial data, guys, which had the following key indices. The turnover of the BPO unit at 90% capacity utilization was 250 lakhs. The turnover of KPO unit at 60% capacity utilization was 550 lakhs. The profit margins of BPO and KPO units are 18% and 15% respectively. Present number of shared employees from BPO unit to the KPO unit on requirement basis are 10 employees. So there were 10 people as such, guys, who got transferred from BPO as such, guys, to KPO. The number of hours required on cross training of one employee and the rate per hour beta is approximately 10 hours and 3000 per hour. The CEO's next half year overall target, so this is half yearly financial data, next half year overall target for the company is 1200 lakhs with a profit margin beta of 18% for the company as a whole. However, the BPO head has told categorically to the CEO that he cannot spare any additional employee as the BPO is working at optimum capacity. The KPO unit head on the other hand find it cost effective to cross train employees of the BPO for specific tasks instead of hiring directly from the market. Analyze the strategic problem that Mother Company Limited is facing. List few suggestions and brief. So that's a pretty normal question, guys. I give you time. मतलब तुम्हारे को अभी first thing that you'll have to do beta is to see whether you'll be able to achieve the targets or not, is to write an overall this thing beta financial data for the first half year as such, guys. 100% capacity पे कितना possible है, कितना कर सकते हैं, guys. ठीक है. All of you beta read this question. Read the question, guys. Do not waste time. Yes, guys. I'm assuming you guys have read the question. Answer वहाँ पे दिया हुआ बेटा. For this additional question, we'll simply go through the answer that is given here, guys. We might end up this session really well. छोटा session है बेटा ये. Do not worry, guys. Doesn't really make a difference if you have one session of 2 hours as such, guys. But then, just in case, beta, you come across sessions like this as such, beta, you have planned a proper 3 hour class as such, guys. Do something else, beta. Revise instead of merely just tracking it. Or guys, or do this with another class. Do this with another class as such, beta. Do one more session of 3 hours. Try to put in more effort. So guys, यहाँ पे बेटा what is given is very clear. They gave us the profitability, guys, at 100%. Profitability at 100%. If you look at the profitability of business processing unit from the answer, guys, you will realize that the profit of BPO unit, overall profit of BPO unit is low, guys. KPO, guys, has a very high amount of margin in absolute terms. KPO has a very high amount of margin in absolute terms as such, guys, though not in relative terms. So guys, both of them are working on their own divisional performances as such, guys. They will have to see as to what is most beneficial to the company. If they think whether the training BPO employees as such, guys, would actually decrease the overall cost of the organization better, then that should be done, guys. Then that should be done as such better, rather than better KPO hiring it from outside. And then, guys, other measures better is to see how can they increase their revenues as such, guys. How can they decrease their cost? all of those measures should be taken into consideration. You can go through the answers as such, guys. You can go through the answers. ठीक है? Yes, sir. That's the end of this chapter, guys. I thought I would do that question, guys, लेकिन पूरा answer वहीं पे है बेटा, and it was a pretty simple answer, guys. Pretty simple answer. You can pause the video, guys, and you can always go through it. ठीक है, sir. No doubt about it. Let me just, oh my goodness. Did we actually write 154 sides? Yes. Let us just quickly revise a little bit of this chapter as such, guys, whatever that we have learned in this chapter. 2 minutes, guys. Yes, beta. The very first thing that I told you guys in this chapter was that transfer pricing will have no impact as such, guys. Transfer pricing will have no impact on the amount of overall profits that the company makes, as long as the output of the company is not affected, as long as the other division is not procuring it from the outside market. If the decision is not getting affected as such, guys, transfer price will have no impact on the overall profits of the company. Yes, guys, undoubtedly it can affect, or it can have an impact on the profits of each division, but then it will have no impact but on the profitability of the entire organization. So when we started this chapter, I told you guys a lot of organizations are decentralized, guys, are decentralized. Obviously one particular person, guys, will not be able to handle all the operations. For successful organization of business, we have to delegate responsibilities, guys. So this is where I told you that the organizational structure, divisional form, guys, functional form, matrix, or proprietary form of organization, all of that beta will have, all of that beta will tell us as to how much amount of responsibility has been delegated. Then beta we should know as to what kind of responsibility centers are they. Are they cost centers? Are they profit centers? Are they revenue centers? Are they investment centers? Only if you know beta as to what is the amount of responsibility that has been given to them, you will know, guys, as to how should you be evaluating performances. How should you be evaluating performances? Now if divisions work beta as profit centers, and there is interdependence of divisions as such, guys, the transfers from one division to the other division beta is going to happen beta at cost plus markup as such beta. Every division would want to make as such, guys, a good amount of profit, because their own performance evaluation beta can be based on the amount of profit that they are generated. We have seen this in a lot of questions, guys, of divisional transfer pricing, that the divisional performance can be evaluated on the basis of return on investment, return on capital employed, on the basis of residual income, guys. It can be done on the basis of any other performance measure, guys, net profit margin. So every division beta would want to get a higher share of profit. Now whatever it is that the divisions are deciding as such, guys, remember the decision ultimately has to be from the viewpoint of the organization. It should be optimum as far as the entire organization is concerned, guys. This is what is goal congruence, where the goals of the organization, where the goals of the individual divisions as such beta should be aligned with the goals of the entire organization. The kinds of transactions that can occur between divisions beta, normally what we have covered in this chapter is only for goods and services. In reality, they can also be payments for royalties, guys, and they can be loans given by one division to the other division. Yes or no? Yes, sir. And then beta, aims of transfer pricing system kare the beta. The ultimate aim of a transfer pricing system, guys, is to promote goal congruence, ensure beta that the overall profits of the company are maximized. You are able to measure divisional profit, guys. At the same time as that beta, there is independence given to managers so that they can take decisions, guys, which are in the best interest of the organization. Now utility of transfer pricing system, guys, you are able to measure performance of an organization. You are able to arrive at the amount of remuneration that is payable to the employees, guys, compensation. You are able to arrive at resource allocation. If you measure the performance of an organization, if a particular division is performing better, you will allocate more capital. You will try to increase the capacity of that division. We have seen that in one of the questions, guys. Just say, if the transfer price is low, return on investment will reduce, and the top management might not invest more money, guys, in capacity utilization, because according to them ROI is less, but then that is not the correct basis of evaluation. So and plus beta, under multinational transfer pricing, towards the end of this chapter, guys, we've also learned as to how taxes play an important role, guys, in the planning of operations of multinational companies, guys. When it comes to fair valuation as such, guys, when it comes to fair valuation in this chapter, I told you in taxes you have the concept of, in taxes beta you have this concept of arm's length price, but in this beta it is all dependent on what is a reasonable price beta for that product, depending on the bargaining power, depending on the market prices, guys. ये तो पढ़ा चुका होगा इसमें, हाँ. Now when it comes to transfer pricing methods, guys, we spoke about market price, market based transfer price as such beta. We spoke about sharing profits in relation to cost. We spoke about cost based transfer pricing methods, guys. Cost can be variable cost, standard cost, full cost, or it is cost plus markup. Finally, negotiated transfer pricing method. When it is market based transfer pricing method, guys, the transfer price as such, guys, should be equal to market price plus or minus adjustments for any cost savings that are arising due to internal transfers. Basically, guys, if there's any cost that is not incurred on internal transfers, I will have to adjust that to the market price. Now this will be appropriate as such, guys. In reality, this is an appropriate method when the selling division, that is the transferring division, guys, has no spare capacity. It basically, guys, it has a ready market for its product. It is able to sell the entire production, guys. So that is when it is appropriate as such, guys. When selling division, guys, when the transferring division has idle capacity and you are transferring goods at the prevailing market prices, you are undoubtedly better. You are undoubtedly giving a higher share of profits, guys, to the transferring division. The transferring division beta would be in an advantageous position. What are the advantages of market-based transfer pricing system, guys? The market price is based on demand and supply factors. It is not something better that you can influence as such, guys. So this will result in a proper fixation of transfer price. You will be able to better evaluate the performance of the divisions, guys. Better evaluate the performance of the divisions. And if the divisions have an external demand for that product, full opportunity cost is already being incorporated. Disadvantages, guys. Not always market price is fair. What if the market, there's a distress selling in the market, guys, resulting in very low prices. What if better the transferring division, guys, has a lot of surplus capacity? What if the transferring division's product has no external market at all? So these are the disadvantages, guys. Behavioral consequences, guys. The selling division beta will always compete with an external supplier, guys, because you're pricing your product on the basis of market prices. The purchasing division will decide, guys, whether they have to procure at the prevailing market price from the internal division, guys, or from the external supplier. So this will only motivate them better to work better, try to reduce their cost as such, guys, or improve the quality of the product. Always remember, guys, internal requirements beta will always be as per specifications. You may not get that product beta from an external market. So overall, guys, market based transfer pricing method is very good when the selling division has a good external demand, and plus remember they are working at full capacity. Then beta shared profit relative to cost. Here we do not have to worry about behavioral consequences. Here we are simply dividing the total profits of the organization on the basis of costs that they are incurring. We are dividing the total profits of the organization on the basis of costs that each division incurs as such, guys. Value added by each division. After this beta, we moved on to cost-based transfer pricing methods, guys. Cost-based transfer pricing methods. Now, transfer pricing is based on internal cost records. One of the biggest disadvantage beta here is that the cost records can be manipulated, and then, guys, you need excessive access to the cost details of each division as such, guys. Advantage भी बनता है बेटा वही, they say information is easily available on the cost incurred by each division. This cost beta can be marginal cost, standard cost, full cost, or it can also be cost plus markup, guys. Marginal cost beta is where transfers are made at marginal cost. The advantage here beta is that the purchasing division, guys, the receiving division can take decisions as such beta which are optimum for the entire company, guys, because you're basically taking decisions on profit maximizing selling price based on marginal cost to the entire company. Disadvantage beta of this method is that the selling division will always incur a loss. He is not able to recover fixed costs. He will not be motivated to increase capacity. He will not be motivated to do anything as such beta there. And this method is useful only when there is a spare capacity beta. Standard cost beta, transfer price is equal to standard cost beta. Advantage beta is that they will be working on cost variances. They will not want to have adverse variances, guys, so they will in turn work on it. And performance can be evaluated by comparing with standards as such, guys. Disadvantage beta is there's only cost control. We are not questioning the standards. We are only controlling cost beta, and that can lead to cheaper quality of material. It can lead to cheaper quality of material, guys. We always know that if you're merely trying to stick to targets beta, it can have an impact on the quality. Cost control, cost reduction, you should know the differences. Full cost beta is marginal cost plus fixed cost. Again beta, disadvantage is that the selling division is not making any profit. Also, there is no real motivation to save cost beta because you're transferring the entire transferring whatever is the cost incurred to the next division. So this might not result in cost reduction over a longer period. Advantage beta to the transferring division is that they're at least recovering fixed cost. Okay, sir. Cost plus markup, guys. This always would result in a profit beta to the selling division, guys. Again, consequence beta, behavioral consequence is that there will not be any effort taken beta to reduce the cost. Last one beta is negotiated transfer pricing, which is shadow pricing. Here beta it would in turn depend on the negotiation, the bargaining power as such guys of the transferring division and the selling division guys. Selling division, they give them total autonomy as such guys, whether they want to sell internally or guys sell it in the external market, whether the other division beta would want to buy internally or procure it from the external market. Advantage beta is the amount of independence given. Disadvantage beta is that they should have perfect information as to what is their external capacity, what is the amount of external price. Behavioral consequences beta, it can result in suboptimal decision making, wherein I do not want to transfer. We have seen this in a lot of questions guys, that negotiated transfer pricing beta. A lot of questions that we did in the class as such beta were all based on negotiated transfer price. A lot of them beta resulted in suboptimal decision making, wherein guys the transferring division had spare capacity beta. In spite of that, they did not want to reduce the price, or beta the other division guys were procuring from an external market guys only because the transferring division was not reducing the price, and overall level beta the company ended up losing. Guys, I gave you a lot of examples for suboptimal decision making. Now guys, an effective transfer pricing system as such guys, all transfers should be based on negotiations. Let there be total access to information guys, and they should be free to decide as to whether they want to deal with an outsider or deal with an internal organization. Transfer price and goal congruence guys, whenever it comes to transfer price beta for the purpose of decision making, remember guys, the minimum transfer price guys will depend on whether there's an opportunity cost or not. This is from the viewpoint of the entire company also guys. So the minimum transfer price beta is basically what is the amount of opportunity cost beta to the transferring division. So it is variable cost plus per unit. Is there any additional fixed cost, additional outlay per unit plus opportunity cost? Maximum transfer price beta is from the viewpoint of the receiving division guys. ये ट्रांसफरिंग डिवीजन था, वो रिसीविंग डिवीजन है बेटा. लोअर ऑफ नेट मार्जिनल रेवेन्यू गाइस एंड द एक्सटर्नल सप्लायर प्राइस, ऑफ कोर्स सब्जेक्ट टू सर्टेन एडजस्टमेंट्स गाइस, That was about the concept of transfer pricing guys and goal congruence. Okay sir. उसके बाद में बेटा ultimately after all of this as such guys, we moved on to international transfer pricing. There were a lot of questions as such beta that we did on transfer pricing and goal congruence. Only those questions beta come in the examination normally. Do not forget guys, I'm repeatedly telling you as such beta, mark all the redo all the questions beta that have ICAI mentioned or RTP mentioned or MTP mentioned or question number attempt name number beta mentioned beside the question. You will have to do all of them thoroughly guys. इसके बाद में क्या करे थे अपन? हाँ, we directly did international transfer pricing guys after that. That is what we started off beta in the previous class. एक second beta. Looks like we did a lot of questions in the class. Yes guys, I told you better that there are multiple reasons as to why your operations can be spread across multiple countries as such guys. One reason is that better there can be lower wages in few countries as such guys, or there can be better talent as such better in few countries. That is why it's forcing you to set up your operations better in that particular country. Then there can be availability of cheaper raw material guys, and tax rates also better can determine and the demand for the product in multiple countries. Whenever you have operations as such guys, in multiple countries, remember you can use that to your advantage in planning of your taxes, because you can have higher profits. Organizations do that guys, it should not result to tax avoidance. Organizations better try to book higher profits in those countries better which have lower amount of taxes, and have lower profits in those countries that have a higher tax rate. And also better the same thing with currency management. This is what we did in this chapter guys, and nothing else. पूरा चैप्टर यही था. Remember guys, the theory content as such beta in this chapter is pretty less. The theory content, ultimately guys, what you have to remember beta is for goal congruence क्या करना है. For goal congruence as such guys, what should I do? Minimum transfer price याद रखना है बेटा. Minimum transfer price from the viewpoint of receiving division. You should not forget these basic points guys from the viewpoint of receiving division. Every question can be unique guys. You will have to obviously practice questions as such guys. These chapters as such beta cannot be merely revised कि ठीक है ये करो answer आ जाएगा. You will have to actually put in effort better to solve all of those questions. So the minimum transfer price beta will be variable cost per unit guys, plus if there's any additional fixed cost per unit, additional fixed cost as such beta. So this as such guys will be the additional outlay per unit, plus if there's any amount of opportunity cost. If there's any amount of opportunity cost per unit. Correct? Yes sir. The maximum transfer price as such, guys, maximum transfer price. This is better from the viewpoint of, this is from the viewpoint of transferring division, guys, not receiving division, transferring division. And this is better from the viewpoint of receiving division. This beta would be the lower of net marginal revenue, lower of net marginal revenue, guys, and external buying price, external buying price. This is what you will have to remember, guys. Another important point, guys, that you should know is if there's a decision regarding output, if there is a decision regarding output as such, guys, किसका output decide कर रहे हो? Output of receiving division is to be decided. Output beta of receiving division is to be determined. If you were to determine the output beta of the receiving division, let transfer price beta be equal to minimum transfer price. Let transfer price beta be equal to minimum transfer price. मतलब you are recovering the opportunity cost of the transferring division as well, guys. Receiving division has multiple options. जैसे बेटा, if you remember that question that came in Jan 2021, alpha, beta. So there you were to determine how much will beta sell. So we took variable cost. If the output of transferring division beta is to be determined, if the output beta of transferring division is to be determined, there were a lot of questions, guys, in which we did not know as to whether we should sell in the external market or should we transfer internally. So there beta we directly took transfer price beta as maximum transfer price, external procurement cost of the other company, external procurement cost of the other company. Remember this, guys. Always remember this. ये लिखना है तो लिख लो बेटा. I'm zooming in. You can write this part, guys. Yes, guys. You can write this part, but all of you. Last में लिख लो बेटा. This would be good for your revision. Hope you're all done with this part, guys. Sure, better copy this as well. Copy this as well, guys. Copy this as well. Okay, sir. Understood. Also, guys, if you were to talk savings from the viewpoint of company, guys, savings from the viewpoint of company beta अगर कुछ है तो remember this will always be the difference between minimum transfer price. The advantage to the company as such beta would always be the difference between minimum transfer price and maximum transfer price. Minimum transfer price as such, guys, and your external supplier price जो भी है बेटा, that would be guys the saving to the company. Are we clear? Yes. That's the end of this chapter, guys. I'll see you guys in the next chapter. Keep studying, keep revising, guys. Bye bye, guys. Take care. Copy कर लेना बेटा, वो नहीं हुआ है तो pause करके कर लेना, ठीक है? Okay, guys. Bye. See you in the next class.